Lyft stock has gotten hurt in the last few days, and Yahoo Finance decided that they were going to investigate why that was the case. And so the question about it is, okay, they've done really well with their earnings and they've beaten expectations and they're a profitable company. Why do they deserve to lose value in their stock? And so the CEO basically said that there are some speculation about autonomous vehicles coming out and how that might impact Lyft, and also that there's consumer data that's coming out that might show that consumers won't be using a rideshare service like Lyft as much. Maybe they won't be going to the bar or going to see their friends on the weekends because they feel like they don't have enough money to be able to do so. That also brings up a couple of other points that I wanted to make, because there were a couple of companies that I've seen do this pattern in the past where they've beaten their earnings, they end up losing value in their stock. And a couple of those companies are Crocs in November of 2023, and then also Academy Sports in September of the same year. And so what happened to those two is they had two things that are really pretty much the same go wrong for them. And so while they made money in the quarter that they reported, they had revenue outlooks that changed, or another term that's called estimate revisions. And basically when you see an estimate revision that goes down, or when you see an earnings outlook that is poor, like you did with Crocs in 2023, where they said that even though we had a great quarter this quarter, we're expecting to not be able to sustain that, and in fact to do 1 to 4% worse in the future. Or Academy Sports, where they have a estimate revision that is unfavorable according to a website like Zacks. That's something that'll end up hurting them. And so what I did notice when I did a little bit of digging into Lyft, besides just looking at their interview with Yahoo, I found that they had about a 50% estimates revision, which is really what's going to be hurting their stock right now. Because if you think about it, you don't invest for the past, you invest for the future. And if they're saying we're not going to be making as much money in the future, what you going to do? You're probably going to sell unless you really, really like the company. So that's a little bit about why sometimes stocks can lose value if they have good earnings reports. Thanks. Hope y'all make some money today.